We're looking at the top 6 uranium miners on the ASX, and we've had a lot to choose from because uranium prices and miners have been running ballistically high and fast as the uranium price has shot through the roof at levels not seen since 2011. We've also seen and heard rumors that the White House will be putting sanctions on Russia's enriched uranium supply, where about 36% of the supply comes from. Now, they're only rumors because, as we have seen, their supplies really see them out towards the end of 2022. So most people that speculate that have really not seen any qualified opinions coming from the US. Now, we have a look at the uranium consumption over the last recent periods. We do see the US consumption was in 2020 was about 40.3 on this scale. That's in millions of pounds. We see China's consumption in 2020 was 23.8 million pounds. Now, Sprott, the Physical Uranium Trust that was launched August 18, 2021, then looking at its consumption through to March 11, 2022, 33.4 million pounds. This is huge demand coming from a recently listed uranium trust. We looked at it in more detail when it hit the market and started really impacting the spot prices of uranium. And we did actually see some miners buying up their forward supply because it was cheaper than actually getting it out of the ground. So buying existing mines or buying forward supply. But let's look at the top 6 miners on the ASX now. You'll see some many names that are familiar: Paladin Energy, Alligator, Boss, Deep Yellow. Before we get the comments below to say you've missed this one, I've forgotten that one, their performances are nothing short of phenomenal, 18 to 30% over the last month. But when we're having a look at the top 6 here, these ones still beat it performance-wise. So no doubt they are some of the best to trade on the ASX. They've been outperformed in the last month. So number 6, we start off at TOE. You've got Toro Energy. You can see that share price, 1.6 cents, getting over 2.4. Lots of leverage in that share price. So trading a highly leveraged speculative play on the uranium side. TOE gives 32% over the last month. Then move on up to the next one. We've got VMY. These are all names that we looked at in the last couple of uranium rallies, so they're very familiar to the listeners. But VMY has put on 33.65 and trading halt, you can see there. But coming out of the halt, 20 cents, getting up over 24, 25 in the trading sessions that followed. VMY sees placed behind Peninsula Energy, PEN, fourth place, 34.48%. Again, you can see all this rally happening as we're seeing the talks. Terrible situation in Ukraine and Russia, and then the talk of sanctions and how that rolls out, how that plays out for energy demand, energy supply worldwide. Then we move up to EL8. EL8 Elevate Uranium, 35.67% return over the month. That's a strong rally coming from 40 cents. Now what we're seeing here is a spring. If you know a spring and know how to trade springs, you see them coming out of the base, and you can see this has really happened before. So understanding a volatility contraction pattern and a VCP are critical for trading these fast moving miners. Commodity exposed companies on the ASX have been running very strongly. You can have a look at those walkthroughs of how to trade those patterns and how to spot those patterns. VCPs and springs are two critical ones for trading these fast moving companies. That's EL8 coming in at number 3. Number 2, Bannerman, a name that many know, trading in the uranium space and coming well off its highs at 42 cents, not reflecting that commodity price that we saw on the chart at the start of the video, but the rally has really fallen into place and kicked into gear. 18 cents, 27 off that runs, and we do see that moving around, coming out of this basing pattern that we did see June, July, August earlier in the year. Now we move up to the top performer of this week. We've got Lotus Resources has put on 45% over the last month. That rally sees them come back up towards their highs seen in October, November, and bringing that lens out, you can see that rally bottom left, top right, running hard to where they are now. But going back in 2010-11, this is where we're seeing the Fukushima disaster, and that really did see the uranium price plummet. It's gone through some reconstruction here, and then Lotus has kicked back into gear. So bringing that back into the daily 1-year chart, you can see it's come down off the 200-day moving average, retested this previous highs, testing into that phase, but showing the inability to close lower, gets back over, and then starts to increase with a bit more volume into the rallies. Wild ride, dipping back and retesting before shooting back up to the current highs that Lotus is holding. These are the top 6 uranium miners on the ASX. You can follow us on YouTube to keep up to date with the latest leading thematics on the ASX.